Good morning, everybody. I can't see. 31 people in. Apologies. I was waiting to see people arrive. I forgot it was a webinar. You're all very welcome this morning. My name's Heather. I am the Enterprise Program Manager here at Women in Business. And we're absolutely delighted to have Leslie Halliday with us today from Halliday Financial Guidance. Leslie, you're very, very welcome. Leslie's been working in financial services since 2001. And we were just having a brief chat there, talking about the importance of a female professional in this industry and how much more comfortable, I don't know about you guys, but how much more comfortable people feel as a woman speaking to other women. So I personally am very much looking forward to Leslie's talk this morning. She is really passionate about engaging women in their financial affairs, particularly investments and pensions. And again, as somebody who's been self-employed for a number of years, pensions is of a real interest to me, Leslie, so I'll be listening and taking lots of notes on that. So you're very welcome, as are you all, to this membership members webinar here this morning. So I am going to hand you over to Leslie without any further ado. If you've got any questions, guys, you can pop them in the chat box, but there will be an opportunity at the end to have a bit of a Q&A as well with Leslie. So Leslie, if that's okay, I am going to pass over to you, and thank you very much for your support of this event this morning.
Firstly, thank you, Heather, for inviting me to speak to members. I'm delighted to have this opportunity to connect with so many of you at once. Thank you for the lovely introduction. As we said, my name is Leslie Halliday. I help run our small family firm in Bangor, County Down, which we've been operating in the same space for nearly 25 years. I began my career in financial services as a mortgage advisor, and over the years, I've continued my professional development to offer advice and recommendations on all areas of home and personal finance so that I can offer a fully independent whole-of-market financial health check service to my clients. So if we could get the next slide, please, Suzanne. As I am independent, I'm always working on an individual basis, not for a bank or a building society or a product provider. And it's that personal service that I pride myself on. It also means that any advice I'm giving is bespoke to the client. So there's no one-size-fits-all solution. And I believe that an interest in people is key to providing the personalized service that our clients deserve. And with this in mind, today I'm going to offer a general roundup of recent changes in regulation and legislation and how they may affect you, and some general guidance on building financial resilience based on my experiences with clients. If you could pop to the next slide, Suzanne. I'll also share some expert knowledge on benefits you may not be aware of for business owners, and to follow up and provide that personalized advice, as today's going to be generalized. I'll be offering everyone on this call a free 30-minute follow-up to ask any questions or identify any areas you may require advice or guidance on. So I thought we would begin this morning with a little poll, just to check you're all awake. If we could have the poll, please, Suzanne, the first poll. Hopefully that's popped up in front of you there. We're just making it nice and simple. What age do you plan or hope to retire? Just one choice, if you wouldn't mind filling that in. We've got age 50 to 60, 60 to 65, or 65 plus. And I'm not going to vote, but I know where I am. Maybe you haven't given it any thought, but certainly if you wouldn't mind popping a wee vote in there, just what your gut feeling is. And we'll see if we can get some results up there if everyone is finished. Have we got any results coming in? Oh, right, okay, super duper. That is great. So most people are saying 60 to 65, and then we've got a few sort of, I would say, conservatives saying 65 plus, but an awful lot of us there around about 50 to 60, and wouldn't that be lovely? If we could get the next slide, please, Suzanne. The reason I ask this is we are just talking about what age would you hope to retire, but did you know that state pension age will be age 68 for anyone born after April 1977. This little slide here just explains, I think it is hard for people to think so far ahead that you're going to know what you have or how much you need, and that a lot of people actually don't even know how much they need in retirement. Next slide, please, Suzanne. I don't know about you ladies, but I do not fancy still working full-time until age 68. Some mornings it's hard enough to get up and out now, never mind at age 68. So let's just look at the state pension at the moment. This is giving you the information there, a little breakdown, so you can hopefully see where you are. And for myself, I have age 68. Anyone born after April 77, their state retirement age is 68. Next slide, please, Suzanne. Firstly, that you may have heard in the recent autumn statement by the Chancellor that the state pension amount will increase by September's earning growth figure of 8.5% in April 24. This is due to the triple lock, and the triple lock was a commitment the government made a few years ago. This slide gives us the information at it, triple lock being that the state pension will increase by whichever is the highest of average earnings growth, CPI inflation, or 2.5%. And it was really the first piece of legislation, the first benefit brought in, designed to make sure pensioners are not living in poverty. And then we had pension credit and everything come in after that. However, whether you're entitled to the full state pension, how much you'll get, depends on your age and your national insurance record. Next slide, please. The full new state pension is worth £303.85 per week. This is the good news. However, you need 35 full years of national insurance contributions to get this. Now, many of us will have had years of reduced earnings or hours working, less hours working whilst raising our families and time out of the workplace. So my first piece of general advice to anyone, particularly women, would be to check out your national insurance record, because if you do have any gaps, you're able to backdate up to 7 years and pay additional or voluntary contributions in order to bring you up to the 35 full years, which is worth doing to be able to avail of the 10,600 state pension. So next slide, please. The government gateway is how we check out our entitlement. You've maybe already got an account there. You can check benefits and things. You can do different things with regards to your self-assessment and tax. So you may well be aware of that. But I can send these slides out afterwards for anyone who needs that wee link and would like to keep the details. Now, as good as that sounds, and it is a great starting point to make sure that we are going to get our 10,600, who really wants to live on 10k a year. Next slide, please. So yes, we hope that we will have our mortgages paid off by then and that any children we have will no longer be financially dependent. Although my adult daughter moved home again this year and the amount I'm spending on oat milk now is pretty significant. So yeah, but yes, the government brought in another significant piece of legislation, regulation in 2012. Next slide, please. And that was automatic enrolment. So automatic enrolment has been introduced in stages since 2012. And for those of us that are employers, you'll already be familiar with this. And whilst it can't be denied, it's a fantastic idea, especially for women who traditionally have held less white-collar jobs where pension was part of the package, and or moved around and had gaps in employment or reduced hours. So whilst it is a great idea and it is beneficial to women and lower earners, it also created a burden on small, medium enterprises. And this is something I can assist you with if you'd like a review, as there are tax planning advantages with pensions for employers. Next slide, please. Of course, if you're self-employed, there are other tax benefits to using pension contributions. And helping calculate this is something I do very regularly for my clients. Little bit of info there on pensions for the self-employed. I know I do get a lot of people who say to me, my business is my pension. It's just something to think about. Obviously, big attraction of being self-employed is you don't have a boss, but in terms of pensions, that can be a disadvantage because you don't have the auto-enrollment facility there. And really what the government was trying to do was make us all more self-reliant, really, in terms of pensions. So I can provide more info on how to use pensions best for the self-employed if you need clarification. Next slide, please. So a good idea for anyone self-employed, get on that government gateway and just check your national insurance contributions. Obviously, we have a different way of paying national insurance contributions if you're self-employed. So it's important to check that you have your 35 years so you're going to get your full state pension. So we've got our state pension, which many of us won't get till 68 if we get the full thing, and we get 10k a year. And we may have little pots from employers due to auto-enrollment over the last 10 to 12 years. However, left alone, the charges can eat away at that. I had a lady come into me last year at retirement, and she had 3 to 4 little pots that she had worked, you know, somewhere for 2 years, somewhere for 7 years, somewhere for 5 years. And she asked me what she had worth in her pension. And when I wrote off to her pension providers to find out more details, it came back and turned out one of them was 0. I was pretty horrified about that. So if you don't sort of keep an eye on it and have a review, that can happen. And that is very disappointing, in that the money that she had put in and her employer had put in was no longer there for her to access in retirement. Next slide, please. So this is a very interesting piece of work that the government has done recently, retirement living standards. I'll just talk through it really, really quickly. The retirement living standards the government has drawn up to show us what is the minimum that we would need to live on per year. This is based on someone living outside London, and this is based on a single person. So you can see the minimum there, 12,800 already. That is more than what the basic state pension is going to give us. And that's going to cover all your needs very basically. You can see just £54 a week on food, no car. And indeed, if you have children or grandchildren or friends, £20 each for a birthday present. So it's a very, very low standard of living. The moderate is 23,300 a year. So that's, you know, more than 10 grand more than our state pension is giving us. That's again for a single person, giving us a bit more financial security. And we have a car there, and we have a little bit of holiday money there. With 791 a year for clothing and footwear. I don't know about you, I'm pretty sure I spent that in shoes alone last year. So going on to the more comfortable is 37,300 a year. So again, think back to that state pension being 10,600. This is giving you a wee bit more financial freedom. Talking about replacing your kitchen, 144 a week. I mean, it's not a huge amount. That's including meals out and stops off for fast food and things, and giving you a little bit more of a clothing allowance. So next slide, please, Suzanne. That's our retirement living standards. Pensions can be very dry. I know, I'm sure none of you have a passion for thinking about your pension as much as I do, but you can see a regular pension review is a fundamental part of financial planning. The earlier you start or upgrade your pension, the more your future self will thank you for it. There was a recent study done there on behalf of Zurich, which examined the attitudes of adults paying into a pension. And 53% of workers believed your 20s is the best time to start saving for retirement. But there had been a marked increase in that. People selecting in your 30s was up from 26% in 2022 to 31% in 2023. But you can see the earlier you start contributing, the longer the money has to grow. And of course, delaying your pension planning can therefore be costly. The longer you wait to begin, the more you have to contribute to achieve the same retirement goals. You know, I might retire in 20 years, but I might live for another 30 years after that. So what would I live off? So that's what you've got to think about. If you want that 37,300 a year in retirement, the earlier you start, the more time you have to take advantage of compounded fund growth and tax relief on your contributions. So if we could have the next poll then, Suzanne, what age should, oh, sorry, beg your pardon. Do we have another wee poll there? What age should we start paying into pension? This is the point where I put my hand up and say, I should have done it sooner. So, you know, the advantages of starting early really can't be overstated. It's not just about the amount, it's about the time it has to grow. So pop in there, what age do you think you've started paying pension? Or if you already have, maybe you want to put in what age you did start. And we'll see if we can get some results. See if there is anything come back to us there. Any wee results popping up? Excellent. Oh, you see, you're all on the ball. You're absolutely all on the ball. Your older self will thank you for the pension planning you start now. There's really no such thing as being too young for pension planning either. The moment you start paying tax, you should think about starting a pension, as dry as it is. I have an example of a 23-year-old young man that came to me last year and said, look, I'm self-employed. I don't have anyone paying into pension for me. You know, I don't have an employer. I'm earning good money right now. I'm living at home. I know my mum said, get down here and start a pension. And he did. And in sort of 18 months, he's got a good wee pot there. And no matter what happens in the future, whether he increases his contributions or takes a break or goes to work for someone, he's got a pot that's already growing, you know, from age 23. And on the flip side of that, I had a 62-year-old man who came to me last year who had put off joining any of the employer's pension schemes that were offered to him and had never started a personal pension. He was coming to me at 62 and saying he'd no pension provision. Thanks for the poll results, Suzanne. That's very interesting. That's great. Next slide, please, if possible. Here we go. Why have a pension review? A lot of people think, oh, our wee poll results are still on the screen there. Can they pop off? Thank you for that. Why have a pension review? A lot of people do say, well, sure, my partner's pension will pay for me in retirement. But then we have to think, what about divorce? You know, it is a real factor. Your retired self will thank you for the things you do now. So we really do have to think and provide for ourselves. I'm not sure if that has just got stuck on my screen or if I can move it. Is it, maybe it's just my screen, but if that wee poll has gone away, let me know if that's all good. So
the wee poll should be away if you just want to X out of it. If it is on anyone's screen, you can X at the top.
I've got it off my screen now so I can see what I'm doing. Thank you so much. So just a little bit more information here. The trades union had let us know that more than 1 in 10 women were in jobs where their employers didn't have to enter them into a workplace pension. If we think back a couple of slides ago where we looked at the stats that was needed for that, again, it is really all about providing for ourselves at this stage now. So if we could go to the next slide, please. The gender pension gap. One of my favorite things to talk about. It's a concern that keeps me motivated to encourage clients to seek advice and review their savings for retirement, which will ensure a secure financial future. The gender pension gap is absolutely the villain in this story. I'm on a mission to conquer it. Getting everyone, especially women, to review their finances is all about protection. I was quite scared by this. Women aged 25 today are projected to retire with 100k less than their male counterparts. When I let my dad read that fun fact, he was pretty appalled. And that's due to all the reasons we've already covered. So what do we need to action? It is all about personal responsibility. That's where the government has been moving us towards on retirement planning for the last 15 years with the changes in regulation and legislation. Next slide, please. Recent changes include some very interesting things came out in the autumn budget. The lifetime allowance, briefly, this was designed, it means more of us could put more into pension. An example of this being an NHS consultant being forced to retire early because his pension pots had hit the lifetime allowance of 1,073,100. So there was no benefit to him working any longer because he wasn't going to get any tax relief on that pension. Now the LTA is going to be done away with, which means he can stay in his position, or she, and which that is obviously beneficial to many. There's other little changes that have come in recently. But what we need to remember is that personal pension is the flexible pension. The limit of 68 for state pension may affect an awful lot of us. And there's limits on your workplace pension, when you can take it, what you can do with it. And let's not forget that example earlier where my client found that one of her workplace pensions had just disappeared. Changes to personal pensions, absolutely phenomenally in the last few years to allow people the flexibility to retire early or pass the pension pot on. If we could go to the next slide, please. So pensions in the self-employed, once again, I often get asked, can adding money to my pension reduce my tax bill? Here we are. Yes, the most interesting fact about, you're saying interesting pensions, Leslie. I find it interesting. A lot of people don't realise you get your basic rate tax relief paid into your pension by the government. But if you're a higher rate taxpayer, you can claim back up to 25% more. So there's absolutely a benefit worth to having a review of that. If we could go to the next slide, please. Pensions are all about time. As we've said, if you're not putting the money in and taking advantage of that tax relief, which at the minimum is going to be for every 80p you put into the pension, the government's going to add 20p. It means you're not doing it right and you're robbing your future self. Now, the great news is pensions can now be passed on to your beneficiaries. Almost all pension funds have an expression of wish to leave the fund to whoever, and this can be tax-free, and this is new. You couldn't used to do this. So if we could get the next slide, please. This is my next piece of general advice to everyone. You can contact your pension provider and ask to complete an expression of wish form. This tells the provider who you'd like to choose to receive your pension savings so the pot doesn't die with you, which is fantastic. So protecting our future selves and older selves seems like a no-brainer, but another statistic that always concerns me is what else we protect. Next slide, please, Suzanne. I have an emergency fund, and then COVID came, working from home, it got used. What I will say is my wallpaper in all my main living areas is now lovely. I'm very, very guilty of this myself. We should always keep an emergency fund. But what I did do as a much younger woman, I'm the only one who pays the bills in my house, including the oat milk budget. So although my commitment to my clients means I would always want to work, but if I really couldn't work, I have myself covered with income protection. My loyalty to my own business means, you know, my income pays the mortgage. So without income in a couple of months, you know, I'd struggle. So if we could pop on to the next slide, please. This is some research just out this week from the Office of National Statistics, showing that many people are unaware of what benefits they can access if they're out of work. I think it shows that an awful lot of people think that you're going to get some support from the government, but just like when we looked at state pension, it's not really there to the extent that you would really hope. We need to think about the value of ourselves. We need to think about the value of our own income. And really, if you need your income to pay the bills, you should have a wee look at protecting it with a wee protection policy. Another interesting fact, I think we're going to go on to the next slide, please. Oh, yes, consider your income, consider your financial worth to the home. You know, let's be honest, women don't put themselves first. When we're talking about benefits, you can have a sort of brief history of critical illness. A lot of women don't have that. It seems to be in couples. Men have the critical illness, thinking that it would need to pay if they were off work. It was a heart surgeon called Maritus Bonard and his brother. They were both heart surgeons, and they did the first human heart transplant in 1967. And they were discovering that more people then survived a critical illness than ever before. And following that, their groundbreaking surgeries, critical illness benefit was invented. So that is something that can pay a lump sum or an income to you or your family in times of illness or bereavement. And the critical illnesses in times of illness, it's serious illness. But what about your financial value to the household? We need to sort of have a little talk about that and consider what you would need to provide to ensure that any ill health isn't going to change things in your household there. So these are just everyday small things that we do tend to put to the bottom of the pile. We do often put ourselves to the bottom of the pile and don't consider or specify our value to the family or to the business in numerical terms. Another little benefit here that I'll just mention quickly is PMI, private medical insurance. I know an awful lot of talk about it recently. It is very cost effective if you consider what your time off costs your business. You know, if you're taking that cost as an expense to the business. I know I have it, I pay for it through the business. So that if I need or have an issue, a health issue that needs actioned, I'm not on an NHS waiting list, which we all know are absolutely appalling at the moment, and it's on its knees, the NHS. But you can go and you can get that treatment and hopefully get back to work sooner. So, I mean, it's also can be used tax efficiently for the business. And that is something that certainly I can talk to people about there. You may already have a little policy in place. It's very useful. So that's another little trick for business owners there. If we could perhaps now move on to one of the main areas I'm asked about on a regular basis, mortgages. What has been happening in the mortgage markets in the last 12 months? The answer is a lot, and there is a lot to illustrate that. The mortgage market is a huge part of the UK economy, and any uncertainty there has caused lenders to increase rates, and that's it in a nutshell. So that means that many of us who were on a fixed rate will see an increase in our mortgage payments. The good news is we can look at fixing a new product 6 months in advance. Next slide, please. I don't mind telling you, here's some facts and figures. My mortgage product expires this year, and I fixed it 3 years ago at 2%. You can see the current Bank of England base rate is 5.25%. And fixed rates today are around about 4%. So I decided around a year ago I could help myself by increasing my mortgage payment in order to have a smaller balance when the fixed rate ends, and also tricked my brain into thinking, oh, this is what I pay now per month on my mortgage, so that when the increase comes after June, I'm already used to paying more, and I brought my balance down to so the higher rate will be charged on a lesser amount. So that's just a little practical tip I've been advising clients of for the last while. If there's any questions you have on your mortgage, please get in touch. I'm familiar with mortgages for self-employed and business owners. I've almost 25 years experience on mortgages. And of course, there I can give you any information about the government charter. Next slide, please. The government charter is due to end. It's due to end this month. Here's some details on what this is. Essentially, you could move down to interest only for 6 months or extend your term, all designed to bring your payments down and help people through the cost of living crisis. Will the government have any more help for mortgage holders, and will rates drop? These are all things I'm asked day and daily, and I can keep an eye on this and advise you certainly. I know I also have, over the last year, had a lot of concerns from self-employed people about affordability, but I do have almost 25 years experience in the mortgage industry, and I'd be very happy to review your mortgage for you and give you a bit of advice. For first-time buyers, I understand the challenges of navigating unfamiliar terms and questions, so I'm dedicated to making that process as seamless as possible. There's nothing more satisfying than witnessing clients move into and take ownership of their first home. It's one of my favorite parts of what I do. So if you are thinking of purchasing, please let's have a chat. I can explain how purchasing property works, the terms involved, the requirements, and give general advice on saving for a deposit and what all you would need to provide to get a mortgage. So just talking about savings, if we could move to the next slide, please. There was an interesting piece of research come out a couple of years ago that's always stuck in my mind. 72% of women do not trust financial advisors. I can sort of see why. Heather touched on it at the start of this little chat here. When I go to conferences or seminars, it's just a sea of grey-haired men in grey suits. You know, I think as women, quite often we feel judged, or we don't talk about money. You know, we feel it's kind of vulgar to talk about money. But the value of taking advice is so important, and really considering what we need to invest for. Are we thinking about our children? Are we thinking about our long-term goals? You know, cash isn't always king, as we've seen with inflation over this last year. So one of the first things I will talk to people about if they want to talk about savings is, what is an ISA? An ISA is something everyone should have. It should be your starting point. You can do a junior ISA, you can do your ISA every year. And the general investing rule I would say to people is more ISA if you're younger, more pension if you're older. Your ISA allowance has remained at 20,000 every year, but that is tax-free. And that means if you're putting money into it, when you want to take it out, it's free of income tax, it's free of capital gains tax, and it is available for everyone regardless of your employment status. The LISA was a great piece of government legislation that came in a number of years ago. It's worth doing. If you're under 40, whether you're saving for property or retirement, the government is adding a 25% bonus to your savings. Now, you can only save up to 4,000 a year in a LISA, and only until age 50, but it's absolutely worth doing, I believe. And I will just pop on to the next slide here, which just sort of has a summation of the points I've raised there. The fundamentals of financial resilience: have your rainy day emergency fund, make sure it is immediate access away from any savings and investments. Ideally, you would have 3 months income. Consider income protection for the person who pays the bills. Even self-employed people can have income protection. There are other benefits. I'm just seeing a little note come in there. Yes, thank you, Heather. That is so interesting. My goodness, it really, you know, until it happens to you, quite often we don't think about it, but that's the case with an awful lot. I see, yes, with self-employed people, there are specific types of other benefits available. And oh, I've made a spelling mistake, excuse me. Specific trades, there are different types of things. Consider key person insurance. This is an interesting one. I had a client who had an employee who it was designed, and she did the designs for the business, and it was her designs that the clients loved. And actually, she had great relationships with the clients. And the business realized that, you know, if we lost her or if she moved on, I'm not suggesting we're losing her, if she moved on, you know, that would be a huge impact to our business. And they actually brought it down numerically and thought it would be about a 71% reduction in their business if she actually wasn't available. So they took out key person insurance. We can also have shareholder protection in business. Don't assume the spouse of the late partner would allow the business to continue. If they passed away, they may wish to force a sale, and that's you out of a job. I have seen it happen. Consider what your key employees are worth to the business. I can help you work this out. It certainly is interesting. And consider what you are worth to your family and how a worst case scenario event would impact the family. Plan for it now. Insurance gets more expensive as we get older, so set it up now. Consider reviewing your mortgage if you haven't done so in the last 12 months. So much has happened. I actually got some emails this morning. I tried not to look at my emails in case anything too urgent came in because I wanted to be present for this. But I got some emails saying some more lenders are dropping their rates on fixed products today. So certainly if you've been putting off doing it, because I know there's been an awful lot of bad news and scare tactics on the news about mortgages, but we can take a little look at that and see if there's a product that might save you money or get you a better deal than you're on. If you're able to, consider overpaying. That would be a tip that I would give you. Even if you're in a fixed product, most lenders allow up to 10% per annum without any penalty. And just mentioning there again, we insure our cars, our homes, our dogs and cats, and not ourselves. It really is funny. What is our financial benefit to the household? We just don't prioritise our worth. And a financial health check for your business. Again, just all the things we've covered there quickly. A financial health check on your pensions or investments. Regularly review to ensure your plans are still up to date, not expiring, or any changes you've had to your household, your income, or your circumstances. Do your plans still match your needs? So just on to the next slide, please, Suzanne. Any questions? I can see there might be a couple here in the chat. If you'll just bear with me while I take a little peek, but you can pop questions in there if you have any, and we'll wait a wee minute to see if anyone sends anything through. As I said at the start, what I'd like to do is offer a 30-minute financial health check Zoom call to everyone. Simply drop me a line and we'll book a time. You can use this to ask any personal questions that you might not want to ask right now, or expand on any issues that I've touched on that you think might affect you. My phone number and my email and everything will be on the next slide, and the slides are available for everyone to take home if you wish. So yes, any questions at all coming up there? Heather, anything come through to you that we might want to cover off? The three things I would say to take away would be to check your national insurance contributions on the government gateway. If you have a mortgage, review your mortgage, see if you can save money. And if you haven't already opened an ISA, even open a LISA if you're under 40 with £1, you know, and get that open so you can put money into it. Junior ISA again, you can open one for a child, you can open one for a grandchild, just get it open. Oh wow, I'm getting lots of questions now. Thank you so much. Places to start for self-employed pensions. Well, what I do is I do personalized advice. So I'd be offering everyone, you know, a personal review. I will look at your individual circumstances and see. I don't believe there's one size fits all at all on pensions, because we all have different ideas about why we want to, when we want to retire, what we want from it. So I really don't think pensions are one size fits all at all. Life assurance, if you're single and 65, you're absolutely right. It may not be something that you need. There may be other benefits that are more beneficial. You may want to look at income protection. You may want to look at critical illness. There's family income benefit that pays an income if you are off work. There's various things that maybe life insurance isn't the best thing for that circumstances. But if we have a little look and see and establish, is pension the best option to save for the future if you're in your early 40s? Yes, I think as you get older, more into pension is the best idea. And if you're younger, more into ISA. Cash ISA better than regular savings account? Absolutely. It's tax-free. It's tax-free. So anything that you want to take back out of it there, is tax-free. You don't pay income tax on it. You don't pay capital gains tax on it. Just have a little look or ask me any questions about what you think. I think I might have missed a question. Hang on a little second. Yes, absolutely. Personal questions, keep them for me and send them on through. Thank you so much for your questions. That was really quick fire there. So thank you so much for your time, everyone. This is very, very general, and I'd be very happy to provide personalized advice on any areas we've discussed or anything else you have questions on. So thank you.
That was absolutely fabulous, Leslie. I'm half inspired to definitely rush out and get that income protection, and half terrified at the prospect of what my pension looks like. I think
That's what I'm here for, so you're not terrified.
really interesting, isn't it? Because I think it's the whole knowledge is power, isn't it? You know, and for me personally, I was working and then I went self-employed, and I haven't necessarily kept up pension contributions, and now I'm back in a role again. So it actually inspired me to go and look and see exactly what's sitting there. So I've kind of been geeking out on it a bit, and then I really loved the slide on the moderate, was it comfortable, minimum, moderate, comfortable, or something like that, because I think it's really hard to know, isn't it, exactly what that pot of money is going to actually look like in reality. So no, that was absolutely brilliant. I'm just double checking whether there's any other questions. There's a whole bunch of, if anyone's not had their question answered, by the way, that's somebody impersonating me at the bottom. That's not me with the brother with long COVID. I think that's Roisin. So there's a few more there. Leslie, can you see that? Leslie,
I've got them now. I've got them now. Yes. What age would I class younger versus older for the ISA guidance? Good point. I think 40 is maybe a good cutoff, you know, because if I think, you know, I might want to retire in 20 years, if I start, you know, really focusing on pension at 40, and I've got a little bit in it already, then that is a good point to say, okay, we've got 25 years left. We need to build this little pot. I'm glad that session was timely for you. Thank you so much, Lorraine. Thank you. Can I explain about the key person insurance? Does the key person need to be aware of it? Well, there's different types of it actually, and certainly we could discuss that. It is going to go to the business, not the person, not the employee. So it's really just looking at their benefit to the business, their value to the business, and knowing that if they weren't there, how it would affect the business. I think it is quite an interesting one, and certainly I can provide a lot more information and personalized quotes and things if you'd like to discuss that. Our ISA is still worth it at 2% interest. Yes, that's pretty offensive, isn't it? Not just cash ISAs, there's stocks and shares ISAs, and that really is where you see proper growth. You know, it has been a very strange year for the markets, and of course we go back to my question, why do women not invest? But you know, anxiety and fear about financial decision making, it has led to us traditionally being underinsured, underprotected, and underfunded for our retirement. And I firmly believe that women deserve to grow their wealth as much as women, as much as men, and I want to support women in making financial decisions and investments. It is an interesting one. It is an interesting question. How could my client whose pension pot disappeared have prevented that? I should just come in a little bit earlier, and I had been able to see that there was charges eroding that pot. So the pot had been set to the side when she left, and we could have done something different with the pot, hopefully perhaps moved it into another pension and not lost that. The minimum moderate, that's a great question. That is a little cash flow question. I can work that out with you individually. I like that one. I like to do cash flow modeling. It's quite fun. So what I can do is either take the size of the pot that you have and work back and see what you should be paying per month, or look at what you can pay per month and see what size of a pot that would give you, and then do that translation in order to show what you're going to have at retirement. That's a great question, and that is something that I do for clients all the time. Here's a good question. Working away. Yes, absolutely. We should be able to do that. There's a lot of pension legislation that means pensions shouldn't just vanish. We should always be able to find them and find out where they are and how much is in them. A minimum age for opening a ISA is 18. Sorry, I'm getting loads of questions. I'm firing through them. Thank you so much. 18. So, you know, if you have children or grandchildren or anything, And you can pop that open for them with just £1. I think it's very much worth doing. I haven't put a lot in mine, but it's lovely to see the government bonus when it comes in at 25% on top of that. You can't take that back out. That's something about a LISA that's different from an ISA. You can't take it back out unless you're buying a property or you're retiring. Whereas with ISA, with your stocks and shares ISA or your cash ISA, you can access it at any time. And when you take the money back out for any reason, it is cash free. Pensions really are a winner there, Lorraine, when you're getting that tax relief on top of it. There is a possibility of combining pensions from different roles. Yes, it's not a silly question whatsoever. The thing is that is very personalised, because there are so many types of pensions, not just your state pension, your personal pension, your workplace pension, but within that there's a lot of types of pension product. So it's a good idea to have a proper review, look through what each of these products can do. I had another client who had a great fund when it came to retirement, and discovered that he couldn't actually do drawdown, which is what you want to take the money out of the pension. He could only buy an annuity. And you're thinking, well, what's wrong with that? Recently, with interest rates, in fact, over the last 10, 15 years with interest rates, annuities have been flatlined. So the money that you were using your whole pot to buy a fund for life, and it was rubbish. You were getting a really bad return on it. So what you really wanted, and what a lot of people want, and it actually relates to their tax situation as well, perhaps if they're a higher rate taxpayer or they've still got income from somewhere, you want to be able to take the money as and when you need it in relation to your own tax planning. Yes, you can have an ISA and a LISA at the same time, certainly. These are fantastic questions. Thank you so much, ladies. The cutoff point for opening a LISA was 40. It was a little bit like a Help to Buy ISA. The cash to buy ISA was used to buy your home. Can you buy a second property with the LISA? It is only for buying the first property, but certainly you can save in it. Help to Buy ISA is gone. It was retired. There were so many difficulties with it. Retired is a nice word. When it was brought in, it was a nice idea, but it was not thought through properly, because what was actually happening was the government was taking so long to apply the bonus at the end that first-time buyers were actually not able to get their full amount for their deposit. So they were having to find somewhere else to get their deposit and pay someone back when their government bonus came through. It was a nightmare for solicitors, conveyancers, and a big worry for lots of clients. Thank you for that question. So yes, LISA is different to Help to Buy ISA in that you can't take out a Help to Buy ISA anymore. A few different pots from few different employers. Yes, they would be considered different pots. It's possible that combining them might work. It's possible that they're different types of products and that can't be done. So it's something to look at, and certainly something to work through. Pension research can take quite a bit of time, because you want to get the correct answers for everybody, but there are a lot of types of products. I think that's another reason why people shy away from having review, because you say, yes, I have pension from there, I have pension from there, I'm sure it'll be fine. It's a heck of a lot of complicated. They write to me all the time, there's a lot of paperwork, but that's what I'm here for. A Help to Buy ISA can be transferred. I don't believe it can, no. Yes, if you are a first-time buyer, whether or not your partner owns a house, you can use your LISA or existing Help to Buy ISA against a new house if you want to buy together. That is correct. I am really excited to hear we've got a newly self-employed financial advisor. Hello, thank you so much for joining, and thank you so much for your kind words. That's awesome. I might have missed a question or two. I'm just going to really quickly scroll up.
I did see one there. Oh, I've scrolled down as well, about whether you can still claim back your COVID work from home allowance that the government offered. Is it too late to claim?
I think it might be too late. I'll double check that for you, but I think we might have passed that. Yes, as you can see from me talking about the government mortgage charter at the end there, when they bring something in, as good an idea as it is, quite often they're very temporary measures. The government charter there, which I know a lot of people needed to use and wanted to use to help with their mortgage payments over the last little while, it was always due to end in January, but funny enough, the government haven't mentioned it again. So whether they extend it, they got all the lenders on board, they got all the mortgage lenders on board to say they would offer this to their existing customers, but they haven't mentioned it again. So whether it just disappears and we no longer have that facility, but if you do need to use it, please please do get in touch, and I'll explain how it works and give you a bit of advice sooner rather than later. I'll just check if there's anything else that I've missed. Thank you so much for all these questions. This is great fun.
Absolutely brilliant. And I think the key thing, Leslie, isn't it, that it's so personal. Finances are so personal to each individual that the best thing really to do is have a chat and kind of talk through individual circumstances. And get very specific answers. This has been a broad overview to push you in the right direction.
Sorry, someone had a question there about pots, and I'll just answer that again with more information from the autumn budget. There was a consultation, a white paper coming out to give us a new pension pot for life, which may make it easier for us to move all those little pots that we had with employers into one and keep that with you if you move employer, or move it into your personal pension, so you have the freedom. With workplace pensions, it's a fantastic idea, like I said right back at the start, and I do think it's beneficial to women, the legislation. However, it's not flexible. It's not flexible. You have to do what that pension provider through the employer has said, and to have a pension pot for life that you could take into your personal pension, which will have a lot more freedom. You can retire at whatever age you want based on, you know, the general limits. That could be something very interesting, and I'm very, very much looking forward to the government's consultation on that, a lifetime pension consultation for pension pots for life. So yeah, stay tuned. I'll hopefully put a little bit up. I often put stuff up on the old Facebook machine to show people what questions they're having at the moment, sort of, again, general stuff. So if you want to follow me there, please do. Another question I know someone asked me the other day was the Class 1 national insurance. Just since we're talking about national insurance today, that 2% cut came in on the 6th of January. And of course, that also affects self-employed people. So we have those national insurance cuts. Hopefully, about 2 million people are expected to save on average 350 a year. I would suggest, what are we doing with this saving that we're making? Do we use it to look at our protection? Do we look at it this way? Do we say, hey, we've got some new money coming in, or rather not being taxed? Can we benefit ourselves? So that's just a little bit of info there about very, very recent questions. But again, this isn't personal advice, and it's all just general questions that have been asked recently.
Brilliant. Absolutely brilliant. It's fascinating. There's so many things to think about. Someone's just asked for your email address there, but we can share all that with everybody afterwards, Leslie. But honestly, thank you so much for your time. I think we've covered everything, but as I say, if we haven't, then people are obviously very welcome to reach out to you and kind of talk to you, as I say, more specifically. So yes, thanks again for your time on that. Fascinating. My brain's like that now. I'm like, right, what do I need to go and do? How much do I need to live on? More to the point. Oh, that's brilliant. There's your details there. Is there an email address there? I'm not sure there is, but
I'll put my email address in. Yes, and what I would say is thank you very much for having me. And of course, as mentioned, there are no silly questions. I do this every day. So of course I have answers because I do this every day, but there's absolutely no silly questions whatsoever. If you're not doing it every day, how are you meant to know the details? That's what I say to people all the time. So please do ask questions. Do not think your questions are silly. Nothing about your finances is silly. It's important to you, and it's important to get advice and not put ourselves to the bottom of that pile and think, oh, it'll all work itself out, because we do that. Thank you so much for giving me the time to speak to everyone. It's been delightful. Thank you.
Brilliant. Thank you so much. And knowledge is power, right? That's what I always think. The more you know, the better you can do. So thank you so much. Just going to talk you through, guys, just a few things that Women in Business have coming up for members if you are interested. So we have a Just Connect event, which is a networking event taking place, I believe it's in Coleraine on the 26th of January. You can obviously find all of these things on our website. They're all free to attend for Women in Business members. We have a roundtable, that's an online event for women in professional services. If you haven't attended one of those before, they're really good because we kind of bring people together that are in the same sector. And we also do 4 breakout rooms. We ask very specific questions. It's just a really good way to kind of get questions answered, meet other members, and just do some really kind of specific targeted networking. Similarly, with the Multicultural Women's Network, which is taking place on the 31st of January. Entrepreneurs Connect, for any entrepreneurs in the room today, is taking place on the 31st of Jan as well. That's in the Denadri. That's a really brilliant opportunity. We've got speakers, you get free tea and scones. Sorry, it's a £5 to attend. And again, it's a half-day event. It's really good for you to kind of connect with other entrepreneurs and take some time out. I think with another slide, have we, Suzanne? On events, yeah, Women's Makers is on the 7th of Feb. So that's again for people who are involved in making crafts and things. So similar to the other roundtable. We've a great webinar coming up on ChatGPT, which is, I'm sure everybody is really interested in that at the moment. So we did one before that was really well attended and people really loved. So we're doing a second one of those, which is really how to harness the wonder that is ChatGPT and kind of not make the normal mistakes with it. So that one's going to be brilliant. I'll be jumping onto that one. We have our new members networking event on the 22nd of February, which is for people obviously who have just joined. Really good chance to get to know everybody. And then another Just Connect events for members who are in the Ards and North Down area. So lots of stuff coming up. Yeah, all the details are on our website, so you'll find everything you need to know there to register. And yeah, thank you again to Leslie, and really look forward to seeing some of you at some of our events in the future. Thanks a lot.
Thank you. Bye.